they like to speculate. They like to gamble. And if you can get something, particularly if you have something half plausible going on, if you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country and, so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, somebody calls that a store of value. I mean, I think they're delusionary.
Okay. Andrew has a question, too. Andrew.
Hey, Warren, related to this issue of Bitcoin, you saw that Goldman Sachs just last week announced that they were going to create effectively a trading operation around cryptocurrencies and Bitcoin in particular. You've been an investor in Goldman. What do you think of their decision to do that?
Well, they probably think that lots of people are going to get very excited about it. Well, and maybe already are, but they think there's money to be made trading them. I don't think they're expressing an opinion on the ultimate value. I would be very surprised if the top partners of Goldman are selling their Goldman stock and putting it into Bitcoin. But I want to cover this subject now because my friend Charlie will come on at 8 o'clock and he'll tell you what he will say.
Well, that's my whole entire point. I do want to ask Charlie about it because I think when he talked about the turds, he was referring to this. He said if you're trading this, it's like watching other people trading turds and deciding you want to get a piece of that.
Well, you're not going to get me to comment on that.
Hopefully Charlie's not awake and not watching right now.
Well, the truth is people do trade on very crazy things over time. Imagine people selling their homes to buy a tulip in Amsterdam. If people think they're going to make money the next day, and worse yet, if they think somebody else that they know is going to make money and they aren't going to make money, it just draws people in. I could whisper something on this program, and kind of the more sillier it was, the more it might react, because there's no quantitative limits. If you buy a stock, you say, well, I'll buy it at 15 times earnings, but I won't buy it at 20 times earnings. But when you get into something that doesn't produce anything, there's no checkpoints. There's nothing to reference it to. It's just, it's gone up, so it'll keep going.
Now, I will say